Hello, everyone. Joshua Hayes at BigWaveTrading.com. I hope you are all having a lovely weekend. As we head into the next week on SPY, I want to give everybody an update on where I stand regarding the overall market and how I'm looking to play, quote, quote, it during the upcoming week. So just want to remind everybody, we had the worst CPI data in 40 years here. We had the worst PPI data we saw in 40 years here. Look at where I know it's hard to see, but look at where we open and look at where we close. Look at where we open, look at where we close. And of course, then we had the Fed come out, Waller, with some bullish announcements on Friday. Follow through following a weak CPI and weak PPI. Guys, I'm going to go out on a limb here based on how I understand economics and macro data and say that the worst is behind us, and yet this is what the market is doing. The market is forward looking. It is not backwards looking. For everybody that thinks that everything is going to continue to get worse, it's quite possible. In fact, I welcome it. My long-term portfolio, whenever I started to sell these things off in middle of 2021, when I started to reduce size in long-term portfolios, when I reduced size further in the long-term portfolios, should have gone all out when the Fed started to hike rates here, but, live and learn. But the reason why I didn't do that is because of what we're seeing right now. There is no indication that we have a bottom based on capitulation. The VIX, no, we don't have any capitulation there. Do we have a Fed pivot? Is the Fed going to halt hiking interest rates? They're going to start cutting them? No, we don't have a Fed pivot there. Did we see a massive outflow in equity flow via retail traders? No, we got no panic there. In fact, I believe that retail traders purchasing equity inflow is at or near a new all-time high. So we don't have that there. Are we seeing any sweeps in the options market on long-dated call options out of the money? With sweeps of multiple millions of dollar prints, and they keep repeating it over and over and over, day by day, on the up, on the down? No, we sure do not. So there's no structural evidence via historical precedents that says that we've bottomed whatsoever. So we could easily see another leg down. If that's the case, I welcome it. Like I said, I've been selling off my long-term portfolio stocks at the end of 2021. Started to purchase them again back whenever the SPY hit 400. Back in May, started the long-term portfolios. Added more at 380. But the big add is at SPY 350, SPY 360. If I don't get SPY 350, SPY 360, I'm not chasing. I don't have FOMO. It's not happening. I will only, quote, quote, chase once there is signs of a real capitulation bottom, a Fed pivot, and or it's 100% obvious that we have bottomed. As of right now, there is zero evidence that we bottomed, but I will say this. We just had the worst CPI and PPI data we've seen in 40 years, okay? We've had bad earnings out of stocks like Micron. What has Micron done ever since not beating on the top and bottom line and lowering guidance moving forward? Up. TSM beat. What's it doing? Up. C beat. Up. Looks pretty good there. UNH, my favorite healthcare stock, they beat. Up. Now I know I've only really shown Micron because it's the biggest of the big boys that I track. But the mere fact that you can miss on top and bottom, lower guidance, have analysts lower guidance, and this is what your stock does, it's hard to be too bearish short term. Another thing I want to point out to everybody, look at the SPY. Look at what it's done since the highs in December. Look at the SPY's accumulation distribution line. We are near all-time highs. Now, in case you don't know what the accumulation distribution line is, it takes out all the gaps in the stock market. It only calculates volume flow based on the open and closing prices. So when you gap down like that, but you close higher than where you open, that's bullish to the accumulation distribution. Bearish for the OBV, unbalanced volume, which takes the gap into consideration. But this lower open and higher close, this lower open and higher close, this lower open, higher close, this is all positive for the accumulation distribution line. And I want to show you it's even more pronounced in the DIA, which I believe is at all-time highs, the accumulation distribution line, while the market is selling off. If you guys don't remember the last time the accumulation distribution lines held up so well, you can look at the COVID 2020 lows. While we dipped and while those lines did dip, it did not take long at all for those lines to reach new highs, and then the market ripped higher. So I find it quite interesting that we're seeing the accumulation distribution line being so strong. I want to remind everybody, this chart may look messy and loud to you, but it is not to me. I basically, if we just get rid of that, this is really all I care about is the price chart. Price and volume. That's 1 and 2. Moving averages, Fibonacci retracement levels, indicators, those are all tertiary, quaternary instruments that I use. But basically, it's just price and volume analysis. So when I take the price and volume analysis into account, once again, no evidence of a bottom, no capitulation, panic. See the volume bar here in that reversal? This was a better chance of a bottom. See this volume bar and that reversal? That's a better chance of a bottom than even here. And especially now with no signs of heavier volume. So that being said, the long-term portfolios, just in case I don't get 350 or 360, I went ahead and did some small additions this past week. 10% of the remaining cash max in each of my long-term portfolios. I went to work on Wednesday in one, Thursday in another, Friday in another, and I only added to my ETF products that I want to accumulate on pullbacks. I did add to one lower price big cap, mega cap stock that I believe in 5 to 20 years is going to be extremely much higher than where it is now. And I did the same with another big cap high growth stock that I believe is going to be exponentially higher in 5 to 20 years that I don't have a position in because I believe I've missed it and might not get it. And it is not this stock, but I want to show you guys Roblox. I had an alert set. As soon as Roblox got below 20, I was going to start accumulating it in my long-term portfolios. Each price level down, I was going to buy a little bit more. 20, 19, 18, 17, 16. Look at how freaking close I came. The low was 21.65. But now, look at Roblox. Higher lows, higher highs, moving average are starting to confluence and curl and turn. It's quite possible I blew it, and I'm not going to get Roblox. So that's why I'm picking slowly at some of these other names that are near their lows. But I'm still holding out for SPY 350, 360. Why SPY 350, 360, you might ask? Well, it's very simple. The anchored VWAP from the 2018 lows, which price is still above. It's below the 2020 ones, so that one's already been violated, so it's no longer in play. The 2018 anchored VWAP lines up with the 50% Fibonacci retracement level, and more importantly to me, the 200 weekly SMA. Guys, that's extreme confluence. 200 weekly SMA, anchored VWAP, and 50 Fibonacci retracement level, all at the same 350 price point. Yeah, we get there. All of my long-term accounts, 50% of the capital will be put to work. And then I have a game plan moving forward. SPY 320, we get a little bit more. 62 Fibonacci retracement level. SPY 300, we get a little bit more. Psychological level. 280, you're getting into territory that you only see in the worst market declines. I'm buying more. And I'll be all in if SPY hits 250. Is it possible that we got a bottom in the market? Absolutely. Is it possible this is just a bounce for 2022 and that we bounce for the third and fourth quarter and then roll over in 2023 to new lows when it's quite possible we'll see a recession if we don't see one this year? Absolutely. It's very possible. But I'll stick my neck out right now and I'll tell everybody, no matter what happens, I honestly believe eventually QT will end. We'll go back to QE. We'll never leave QE, but we got to get inflation back in line. And at some point in 2024, I'm going to say it right now, I think we're going to have all-time highs in the stock market. Could be wrong. Don't care if I'm wrong. I'm not going to make any bets or trades based on my opinions. Got the game plan for the long-term portfolio. Quarterly portfolios remain 100% cash. They will not be put to work until there's either a sign of a capitulation bottom or a Fed pivot. They will remain in cash. End of day swing side, for me personally, not going well at all, but tiny size. As I'm wrong, I continue to size down, get more and more granular, reduce that risk exposure. So let's say that initially you're comfortable with the $1,000 risk. After a loss, maybe it's $900. After the next loss, $800. After the next loss, $700 risk units. But once things start working again, I'll add size. The good news is I give out trade ideas every single day that I promise members on the end of day side, because I've been cold since April. No surprise. Look at the market. Oh, shocking. I can't believe your long only end of day methodology, is lagging. Surprise. Market's down, 15% plus since this level? The end of day account, at the worst, it was down 20%. The end of day account's down 4% since then. Year to date, it was positive until then. Being a little aggressive sometimes. That's all right. Nothing I can't come back from. Intraday, all the day trading accounts are near or at all-time highs. No complaints there. That remains the time frame of focus. But on the end of day side, I gave out two, quote-unquote, flag names on Thursday for everybody. FNGR is still fine. Hard flag, only two stocks. One was a FNGR, the other MSPR, up 14% on Friday. All I got to do is just for right now, is make sure I don't touch it. Still give it out to everybody, give out the game plan, tell everybody, you got to go. As long as I don't touch it, you got to go. MSPR, nice gain overall. So that's what I'm doing on that end. Intraday, we're still rocking, still good. It isn't perfect. And then for everybody, I want to just show one more time. Got all these indicators on the charts. I know it's kind of sloppy, right? We showed you the accumulation distribution. To be honest with you, I really don't care about that one. Just going to throw that to the side. Where's my... There it is, MACD. So now I'm back whole. So I want to just show you the SPY. These are the levels I'm looking at next week to trade around. Right here in this area, I'm in no man's land. However, if SPY can get back down to 370, find support here, start curling on the 5, 15-minute chart. My indicators are lined up. That's a long at 370 for a play back into the 390s. If it gets up to the 390s, finds resistance and starts to roll over, you got to play from the 390s to the 370s. You break above the 390s, this former support, now resistance, you have room to the 410s. Former support, now resistance, 410. So you get above 393, you hold it, you have room up here. I'll be playing it on a breakout to the long side, expecting a move to here. I'll be playing it on the short side to the downside, expecting a move here. You crack 370, fail again at the retest of 370, you have room to the lows, and if you can break 360, then obviously short, we have actually a huge air pocket all the way back to the 320s, 300s. But I don't expect that to happen. Now looking at all my messy, sloppy indicators, you'll see we're going to have resistance at the 50, the 100, 200 SMA. You could also do reverse Fibonacci retracement levels, multiple resistance points. But right now, we're kind of range bound. So just keep it at that. Then I like to look at my indicators daily. Hey, the Chaikin money flow is one of my most trusty indicators. And when it's bullish, I really don't recommend fighting it on that time frame. So that's the daily. MACD is still below the zero line along with TSV, but we're triple green here. We're in a squeeze. We're starting to resolve that TTM momentum squeeze higher. To me, it seems like we're going to go retest that 410 level. That's what it looks like via these indicators. But now if you want to look like, are we going to run into resistance or just keep flying, you just get to go to higher time frames. Weekly, we are curling. I'm assuming that this is going to go green soon and this is going to go green soon. But obviously, the momentum and the trend is still down. And my most important time frame, where I'll really increase size on the long side when I'm lined up, monthly MACD, lower. Shaking money flow is still positive, but it's almost always positive. You want to see when you get real bearish is whenever it goes red and stays red. And look at the only other time it was red in 2008 into 2009, which was near the lows. You can see now just by looking at the CMF on a weekly time frame, there's nothing to be concerned about. But this is still bad. That's still bad. So in the longest time frame, I'm bad. And the IWM, since I'm a small cap trader, is really the one I look at when it comes to this stuff long term for my trading, the swing size, when I really increase size. Red, green, we're good there. But on a weekly, we're going to turn green here. It looks like we're going to turn green here. That's all good and positive the day. So actually, the IWM looks pretty good here. Squeeze, resolving the squeeze with the TTM trend momentum up. I don't know, guys. I think that we're just going to go higher. I don't think I'm going to get my long-term portfolio on buy, at least this time around. Like I said, this bounce might turn into a longer bear market bounce. We get back up to the 410s. Maybe we then get even higher, make our way all the way up to the 200 SMA, and then in time roll over and hit new lows. Either way, I have a game plan. I assume at some point leaders will continue to show up. And on that note, let's end this video lesson off with showing you some of those leaders. Pulse on the market is just to go through your Dow Jones Industrial Average Index and look at the big caps. Hey, Apple, above its 50. Lower highs or higher lows, higher highs. That looks good off the bottom. CRM, looks like it's trying to hammer out a bottom. Intel, not so much. Don't like Intel anyway. Coca-Cola, near the highs. Hard to be bearish on that chart. McDonald's, near the highs. MMM, doesn't look great. So, jury's out on that one. Cisco doesn't look great. Jury's out. Procter & Gamble, potential shoulder, head, shoulder forming, inverse head and shoulder. Goldman Sachs trying to bottom maybe with Citigroup. We'll see. Walmart, higher lows, higher highs now. See if we can get up to the 200 SMA. IBM strong. Microsoft, jury's out. JP Morgan trying to bounce. Nike bounce. So you see it's a mixed bag. UNH, love UNH. But it's a mixed bag. You can see off the lows, there's some that look good. Disney looks good off the lows. Boeing looks good off the lows. Home Depot, not so much. Honeywell, not so much. Merck, UNH, Amgen, Johnson & Johnson, drug stocks, medical stocks, they look good. So it's a mixed bag out there. So what should we expect based on what we just saw at the SPY and based on the Dow Jones Industrial Average? Overall, probably a choppy market. But look at stocks like Netflix. Looks like it might be bottoming, huh? Looks like it might be bottoming. Doesn't mean it can't go higher, then have a bigger volume bar, flush bar. But at least it looks like it's trying to attempt a bottom. List. I'm adding stocks to this list as I go along each and every day. This is what I call, quote, new leaders. You can pause the video lesson and look at each of these ticker symbols, but I'm just going to go through one by one. And when you look at these stocks, I want you to ask yourself, do you think you would see this in all of these stocks if we were in a secular bear market? If this was going to turn into a 2000 to 2002 or a 2008 to 2009 bear market, do you think that we would have all of these different stocks near or at all-time or 52-week highs? I don't know, guys. I just don't think that would be the case. So that's my game plan going into the next week. End of day side, keeping it small. Main time frame of focus. Intraday, quarterlies are cash, long-term game plans are set in stone. Once again, everybody, if you want to join the family, links are in the description below. If you can, like, share. I'd really love a comment. That would be awesome. And subscribe if you haven't. I'll see you guys next weekend.